You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Keith Schaefer, editor and publisher of the Oil and Gas Investments Bulletin. His website, oilandgas-investments.com. Welcome to the show, Keith.
Thanks, Jim. Always good to be here.
The Canadian dollar's taken a pounding, they say, because of the low price of oil. How accurate is that, and is there any hope for our beleaguered little loonie?
Oh, not in the near term, I don't think. We're basically seen now as a petrocurrency more than ever in the world's eyes. So, if you lay a chart of the Canadian dollar over the price of oil, I think you're going to find a very, very strong correlation. And I'm not sure what it's going to take to change that. But for now, it is what it is, and it probably will be for quite a while.
Now, they say, of course, a lower dollar means our exports are more attractive around the world. But with the U.S. dollar continuing to climb, everybody else's currency is falling too.
That's right. We're actually not doing too bad compared to the rest of the world. And we'll see what happens with Mr. Trudeau's government. But right now, we're holding our own against most of the other currencies. And, of course, this is actually very good news for our oil producers because all of a sudden we get a 30% jump in our oil price when the dollar's down here at 74 cents. So not so good for consumers, but quite good for producers.
What's the long-term outlook, or can we put together one yet?
No, Jim, nobody has a clue. I'm telling you, I pay no attention to the CEOs of major producers. I pay no attention to the well-respected long-term global consultants. None of them have a clue. So basically, we've got fairly opaque data where now everybody's contingency number on the difference between supply and demand is into the millions of barrels. So you've got quite a large gap in consensus as to where oil is going to be, and you only have to look at what happened this year, where back in the spring and fall, half the people were calling for $80 oil by now, and half the people were calling for $20 oil, and here we are at 37. So
without any projections, how can businesses in the energy business put together any kind of plans right now?
They can't, and so that's why if you're a smart CEO right now, Jim, in the energy sector, you're telling the market, you're telling your investors, look, if you're a producer, we're going to spend whatever we make. And I don't know what that's going to be because I can't give you a price to budget on. I can give you a sensitivity analysis, but I can't tell you I'm going to drill 10 wells this year or 6 wells this year because I just have no idea what the price of oil is going to be at any of these given times. So that's where these CEOs are at. They just have to basically spend within cash flow because if they don't, the market will punish them fiercely. There is no interest among the investing community to see any of these producers incur any new debt, any new net debt to grow. It just makes no sense with profits so low. So that's the quick answer. They're only going to spend their cash flow, and so that is finally going to mean, Jim, that production starts to decline this year. These companies have fought tooth and nail to keep production steady, but that's not going to be able to happen for a lot of them now.
And of course, you have a new source of production, Iran, coming online. That's not going to help anybody, is it?
No, it'll be interesting to see just what kind of impact that has. I think that a lot of that has been priced into the market potentially, but maybe not. So we'll just see how that happens.
What about Russia, which has been so dependent on oil revenue? Can they continue with their, expansionist plans, or if you can put it that way?
You mean politically or just...
Yeah, what are they using to finance their war in Syria right now, or do they care?
Well, their ruble is so low right now, Jim, that their actual internal oil price hasn't made that much difference. So what's happened to the Canadian dollar has happened in spades to the Russian ruble, so it's just collapsed. And so they're quite desperate for foreign currency, and I think that's one of the big unspoken stories. Everyone says, oh, this oil price can't last. It's below break-even cost. Well, that doesn't make much difference to the Saudis, the Venezuelans, the Angolans, the Nigerians, or the Russians. They just need foreign currency, and they'll keep producing as long as humanly possible. So I don't think that Russia is actually in that bad a shape just because the ruble has collapsed so badly.
Now, what's the outlook for LNG?
Well, you got to believe that LNG is going to be very, very price pressured right now. You're seeing the beginning of some very long-term take-or-pay contracts get renegotiated. So in Asia, you're looking at Qatari gas, and they've been the largest exporters in the world for many years. they're being not asked but told by their largest customers, like the national oil companies of India and Malaysia and others in the Asian world, saying we're not going to pay this anymore. The market has completely changed, and you are going to renegotiate not only the price of the contract, but many of the terms of the contract. So what these producers were able to do for many years is tell the buyers, not only are you going to pay us this much money forever, take or pay, you have no control over the cargo, so you cannot re-export or resell this gas to anybody ever under any circumstances. And of course now it's gone from being a seller's market to a buyer's market, and all these buyers are going back to these sellers who were so mean to them just a few years ago and basically breaking contracts. And so that's going to be very negative for LNG prices. On the positive side for the buyers, it's going to mean quite a much more liquid spot market for LNG for the first time ever, and that's going to be pretty positive. But you're not going to see the old style contracts that were take or pay and so restrictive. So that all bears that the spot LNG price is going lower. And just like oil, Jim, nobody really knows when that's going to stop.
And spot LNG, you need giant plants and processing facilities to get it out of the ground and onto a ship and moving somewhere. What's that going to do to the plans to build these giant factories?
Well, I think that there's such a big supply coming on now from Australia, and those plants are 85 to 99% done. And the same with 2 or 3 of these ones down in the States now, that you've got that extra liquefaction capacity is just going to flood the market. So it's not going to impact whether those get built or not. They're basically done. But for groups like Canada and other newcomers to the market, it's going to be a huge headwind.
Will LNG prices be low enough that people decide, hey, why use gasoline or oil when I can use natural gas instead, and it pollutes less?
Well, that's a good question. And what we've seen now, there used to be a huge difference. Until the oil price collapsed last November, there was a huge price difference between oil and gas. Now there's not that much price difference. So it'll be interesting to see whether people bother switching from oil to natural gas or not. I haven't had a good look yet at what the price difference is in BTUs, but it's much, much closer than what it used to be. So that actually would hurt increased natural gas use. There's not much point in spending billions of new infrastructure money just to save a few shekels.
Right. But if people start using natural gas, say, for propelling vehicles more than they do now, would that make a difference?
Of course. Oh, yeah. Transportation is the holy grail for natural gas. Personally, I don't see that happening, Jim. Putting together a natural gas station costs a fortune. Putting together an electric vehicle charging station costs about 2% of what it does for a natural gas station. So you're talking about a 98% difference. The likelihood of seeing any natural gas be used for mainstream transportation, I think, is pretty close to zero.
Sure, and you look at daily costs of commuting, say $6 or $8 a day for gasoline. If you use electrical power for your vehicle, it would be about 75 cents a day at current rates.
Is it? Okay, I don't know that. Okay.
Yeah, so if you can get natural gas to come down the middle, but of course there's a huge payoff or pay down, I guess, with natural gas. You have to pay for the price of conversion, and it takes up a lot of room in your car. If you have a small car, where are you going to put your groceries?
There you go. Yep.
Yeah, so at least with electrical power, you know where you can get some. And I don't hear very much about people charging at home. They keep talking about recharge stations here, recharge stations there. Is there any kind of an industry where people can start charging at home, where somebody builds these things for you so you can do a quick recharge at home? Or is, recharging your car for 8 or 9 hours okay if you park it at home?
Yeah, basically that's what's happening now. Like on the edges of the power market in the States, what they're trying to figure out, particularly with all these new renewables of wind and solar, would they be able to get people to buy a large battery, like the size of a car, and put it in their backyard and basically have that fire up every day on solar, and then basically discharge that into your electric vehicle at night. And that's one of the many things that's happening in the downstream power markets these days, trying to incorporate all these renewables, wind and solar, into the grid. And
they haven't even factored that in yet. And yet BC, if everybody put a solar panel up on their house right now, I could see why would you need a Site C dam in British Columbia? Already power demand in BC has been declining every year.
Yes, certainly. Once you get south of here into the States where the sun shines a bit brighter and away from the West Coast where it shines a lot more, we're in one of the big temperate rainforests of the world. But in other areas, Jim, you're right. That has the potential to totally revolutionize how power is both generated and delivered. So the utilities around North America are really scratching their heads right now trying to figure out how to make this work and still preserve the value in their own stock. Because there's a lot of grid defection going on right now to solar. A lot.
We'll have more with Keith Schaefer right after this.
See singing impressionist Andre Philippe Gagnon.
And I think to myself.
In Oliver, December 29th. In Kelowna, December 30th. Buy online and save at ontourtickets.com. Unbelievable harmonies, spectacular performance, the ultimate tribute to the Everly Brothers and Simon & Garfunkel. Bird Dog and the Vintage Electric Band, Saturday, January 9th at the Alex Goulden Hall. Buy online and save at ontourtickets.com.
Welcome back. We're speaking with Keith Schaefer. Keith, the long-range forecasters for the weather are saying we're going to have one of our warmest winters ever. Nothing to do with global climate change, but simply because of the Pacific phenomena known as El Nino. What's that going to do to things like natural gas?
Well, I think, yes, you're right. El Nino is now forecast to be the strongest ever, and that puts everybody on the same side on the climate issue. Both the environmentalists and the climate skeptics are pretty much agreeing now that 2016 will be the warmest year in recorded history in the world, mostly because of El Nino. Now, that should mean, you'd think, kind of a blanket heat across the U.S. in the summer that would just really, really ramp up air conditioning demand. But, of course, as we saw last year, Jim, that has to happen on the East Coast. We had almost record summer temperatures up and down the West Coast, and it really didn't make that much difference to natural gas just because the big population areas are all over on the East Coast. That's the band that, basically goes from Miami to Boston that has to have the really hot weather to have a big impact on natural gas demand. So, being as we're going to schedule to have a big hot summer, that should put a lot of demand on natural gas, and that's a wild card for gas next year, and certainly gas is going to need a wild card because production's continuing to increase, though certainly not as quickly as it did for the last couple of years.
And there should be a much higher demand for gasoline. Americans have been buying SUVs like crazy, but their jobs haven't been paying them all that much, so they're going to be making more road trips for their vacations rather than going overseas, I think.
Right, so that's more oil as opposed to nat gas. But yes, yeah. You're right. Demand for driving in the U.S. was up this year. It's kind of trailed off recently here a bit, but it has been up quite a bit this year, more than people expected. So people keep saying, oil demand is inelastic to price, and that's just ridiculous.
I thought airlines would be dropping their prices a whole lot more with lower energy prices, but that didn't happen.
No, I haven't seen that happen, though I'm seeing a few more deals out there right now. But I think one of the big things here is that a lot of these companies might have hedged their production at higher prices, hedged their oil buying, at higher prices.
Right. So what they did is they bought a lot of expensive oil, and until they use all that up, they're not going to be lowering their prices to reflect oil prices, I guess. And even then, a lot of airlines, until recently, weren't making money. So now they're making a chance to not lower the price and make some cash. And of course, they charge you for everything that you do now. Every breath you take on the airplane is a surprise. They don't charge you for it.
That's right. That's right. That's what they've got.
Well, I mean, they've cut back the oxygen to the cabin because the engines have to spin a little faster to produce it or compress it. Every trick of the trade, I guess. Who needs to take a couple of drinks on a plane to get dizzy when the lack of oxygen will do it for you?
Exactly.
Is there any energy area where people are saying we still have a right to be optimistic?
Oh, absolutely. The whole downstream side of the sector, Jim, is actually looking pretty good these days. What we're seeing is refining margins have come down a bit, but not a whole lot. I think they're probably going to continue to be a little bit challenged here in the near term, but refineries have done really, really well this year. Energy retailers, the groups that sell energy to retail and commercial customers in deregulated markets like Alberta, Texas, they've done quite well. They do quite well when commodity prices are slowly falling. Who else has done really well this year? Power companies in the United States. You know, as we talked about a couple of weeks ago, I think the smart grid in the U.S. is going to be the next big bubble, and you're starting to see companies come to the table with new technologies, small and mid-cap companies on the NASDAQ and the New York Exchange that are being really innovative in helping utilities adapt to the new reality where they are no longer just one-way giants for power, but they're actually two-way conduits, and they're going to have to make room for solar and wind and energy storage, and they're going to have to be nimble, and they're going to have to be much more customer-oriented. And that's just not easy for big companies like that to do. So there's lots of opportunity there, and those stocks have done quite well this year.
I read an article about one area of energy storage that has been around for a long time is sand. You use solar heat to heat up the sand during the day, and you can heat it up to 1,000 degrees Celsius, and then at night use that sand to turn water into steam to turn your generators.
I haven't heard that, but that makes sense.
And so it's a technology that's been around for some time, but they say that it's sort of like an hourglass thing where the sand comes together where you heat it and you store it. There's still a little bit of a technology glitch, but it can be a net producer of energy, very efficient. And then again, countries where they have a lot of solar and a lot of sand, say Saudi Arabia, who needs oil when you have sand?
There's a new billionaire there somewhere, Jim.
Well, it probably won't be me. I do play in the sand sometimes with the nephews and nieces, but not enough to make a fortune, I don't think. With these weather changes and stuff, have they even talked about how they're going to produce power in the future if you get rid of fossil fuels? I mean, at some point there's got to be a make or break.
Well, I think that everybody wants to see a cleaner Earth. And I don't actually have a problem with a lot of the radicalism that we see in the world just to move the masses. And so I think that battle's over, Jim. I think there is going to be room made for renewables at the expense of fossil fuels. I don't think it's going to be quite as quickly as the environmentalists would like, but it is pretty much now an unstoppable trend. And, there's been a lot of subsidies in the world for the last, certainly in the Western world, for the last 3-4 years to make that happen, and it's actually gaining enough critical mass that a lot of these subsidies are now going away or being reduced, if not outright canceled. So everyone's going to have to learn to adapt, lower costs, and again, just as the market always does, it'll anoint the winners and shoot the losers.
Keith, thanks a lot for chatting with us.
God bless, Jim.
My guest has been Keith Schaefer, editor and publisher of the Oil and Gas Investments Bulletin. His website, oilandgas-investments.com. You're listening to HowStreet.com radio. Find us on Twitter at Talk Digital Net. Check out our YouTube channel, Talk Digital Network. Comments about the show can be sent to info@HowStreet.com. I'm Jim Goddard.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.